Hello and welcome to the Wealthy Trades Daily Market Forecast for April 29th, 2015. Let's get started right away. I will go into yesterday's trades. We're going to go into what we're looking at today. But before I do, I feel compelled to go over some of the earnings alerts that I've called out this week. In fact, I've called out 6 earnings alerts and I've gotten a few responses. I want to make sure people understand how to look at these earnings alerts and the viewpoint you should take. It should not be on a very static basis, but it should be on a overall collective status. Okay, so let's kind of dive in and see how is Tyson's earnings alerts doing this week, and then I'll remind you how we did last week and the week before, and we'll kind of give an overall overview of how they're going. So let's start. So Monday, midday or so, I sent out an alert on Cummins CMI to buy the 138. This is what I was doing, by the 138 calls for this week for $2.90. And then I also sent out an alert on buying the Merck 5750 May 1st, this week's calls for 75 cents or less. Those were the alerts that I sent out. So those trades, so let's remember those. And then yesterday, so those were 2. And then yesterday I sent another alert out on 4 plays. I said GoPro, buy the 46. What I'm doing is buying the $46 calls for $2.35 or less. You actually could have gotten in for a little less than that. And then Win, buy the 130s for $3. Twitter, buy the 51s for $2.80. Big thing I want to talk about in a minute on that, but and then X, U.S. Steel, the 2650s for $1.30. And so those were the 4 plays for yesterday. Here's the deal, though. Look at the caveat here. Buy before the close today, which was yesterday, Tuesday. On these, and I'm going to make sure that I put this in the alerts each time, every time. On these, the specific rule is to buy before the close. You want to get as delta neutral before the close as you possibly can. What I mean by that is you want to get as close to the money on this as you can. So by the close. It's based on an historical movement of the closing price. So you want to wait until about 2:30 to 2:45 later in the day to purchase these options. And the reason why is if you expose yourself earlier, then the price can move and you can find yourself either underwater and you're not looking at the closing price or above, whatever it might be, but you want to wait until the close. Twitter's a perfect, or about half an hour before the close, 15 minutes before the close. Closer to the close is the best because then you're going to be the closest to at the money, and that is the purpose, okay? I should have pointed that out, probably didn't, but now you know. Reason why I say that is because Twitter was frozen at about 2:15 yesterday Central Time. All right, it stopped trading. The reason why is because earnings leaked. Twitter then went from about 51.50 down to like 43. Okay, so with that, if you would have waited until 2:30, 2:45 to enter the trade, you wouldn't have entered Twitter. You wouldn't have even entered Twitter. I didn't enter Twitter. I didn't send an alert on that, but that's the basis of the strategy is based on historical responses, based on closing price before the earnings, right? So if that's the case, we need to get as close to the closing price with our options as we possibly can. Anyway, so Twitter technically should have been a canceled trade. I didn't send an alert saying cancel, but it should have been a canceled trade simply because it got halted in trading at about 2:15. It then went from 51 to 42, 43. At that point, you should have said, you know what? I'm not even going to get in this trade, or you should have gotten in the trade at 42, 43, which still wouldn't have been a good trade. But at that point, I actually shot a text to one of people I work with. Shot a text, said, hey, I'm not getting into Twitter. Anyway, wait until half an hour to 15 minutes before the close to get into these trades. But let's just see how these are doing, because if you're looking at this, you're probably saying, geez, well, Win, bad, Twitter, bad, U.S. Steel, bad, Cummins, bad. Holy cow, we must be losing a ton of money this week, right? Well, let's look, okay? Let's see. Again, this is an example of somebody that's going to risk $1,000 or as close to $1,000 per trade as they can. So CMI, your risk is $1,000, let's say, okay? And you bought at $2.90 a contract, so $290 a contract. And then I'm rounding it to the nearest contract, right? So if you buy at $290 a contract, that's 3.44 contracts of the $1,000 risk. You would have done 3 contracts. So your overall risk for that trade would have been $870. And guess what? Let's say you didn't close it and you're still in it. You know, probability says that, and this is the case, it's going to expire worthless. That means you lost $870. Okay, that's not great. Well, Merck, okay, so Merck, you risk the same $1,000, $75 because it was 75 cents per contract. You divide that, it's 13.33, round to the nearest contract, 13 contracts. So 13 times 75, you're risking $975. Well, Merck gapped higher, aggressively higher the next day, if you remember, and you could have gotten out at it opened at $60 and about 25 cents. So let's say you got out at $2, so you bought the 57.50. It's at 60.25 or 60.20. You got out at $272 worth of profits on average. You take that number, 272 times the number of contracts. Overall, that $1,000 turned into $34.36. Your profit on that is $2,561. So you lost $870 on Cummins, but you made $2,560 on Merck. Okay, all right. Now let's take yesterday. Okay, yesterday was a miserable day, right? Well, I'm going to even include Twitter in this calculation, even though technically it didn't fit the rules because it was halted. But let's include that. Win. Risk $1,000, $300 a contract, do 3 contracts. So overall, you're actually risking $900. This is the real risk. And let's just say it's going to open down dramatically. Probably not going to be able to get out for anything. You lose your $900. Twitter, same thing. Let's just say for some reason you did buy it, and you got stuck in the 51s, and you rounded the nearest contract, which was 3.57. So you rounded it to 4. So you're actually risking $1,120. You're down $1,120. So holy cow, geez, that's not good. And then U.S. Steel, $1,000, $130 a contract. I guess that would be rounded to 8. Sorry about that. Rounded to 8 contracts, 7.69. You round it to 8. You're risking $1,040. Well, U.S. Steel is down. Again, I think U.S. Steel has a chance to rally back, but let's say it doesn't, and you just hold this and it expires worthless by the end of the week. You're down $1,040. Well, jeepers, man, we're down. Okay, GoPro. You got in for $235 a contract. That's 4.25. You round it to 4. Your overall risk is $940. Well, it looks like it's going to open up at about $53, which means you should be able to get out of those for about $7, which would be $700 a contract. That means you make $1,860. So let's see how this week worked out. This week we lost $870, made $2,561, lost $900, lost $1,120, lost $1,040, made $1,860 for an overall profit so far this week of $491. Please, people, I ask you, take a broad look. Don't just look at one day. Now, let's go in and look at the overall profits since these alerts, since J&J 3 weeks ago, okay? J&J 3 weeks ago is the call. So these were all the calls that were called out. What is the total on this? Well, the total on this is 14. If you would have taken and you were to risk $1,000 in each trade, 14,885 would have been the total risk on every single one of these trades. Here's how all of them would have played out if GoPro opens at 53, which it looks like it's going to. So let's add that up, okay? Let's add that up. Oh, there we go. Oh, and the overall profit, what's the overall profit? It's the difference between this and this. So let's go this equals this minus this. Overall profit, $5,080. So again, it's an overall viewpoint. This week, still up great. GoPro looks great. Please take that look. Let's dive into what we did yesterday. Yesterday, we went long ATI, short CCE. Overall, good trade in a kind of a choppy, junky market, up about 0.57%. That's good, great, whatever it might be. Let's go into what we're going to do today. Bumping up and down. Again, we're in a downtrend, but don't think that this downtrend is like anything to fear or, oh, geez, what's going on? It's been hovering right around this 50 mark, 50.4 up, 50.8 down, just all over the place. So we're going to do a pairs trade. We've been doing pairs trades, it seems like forever, so we're going to do another pairs trade Today we're going to go long in the XLY. Let's get the stocks in the XLY over in our portfolio. Find the best opportunity. I'm going to actually skip Garmin because Garmin actually has earnings this morning, I believe, or last night. So I'm going to actually not trade, not even look at Garmin. Whoops. Not even look at Garmin because I want to avoid anything that actually has earnings. This is going to be their earnings response day for my core day trade. So anyway, let's go into that. By the way, I have there will be another probably 2 or 3 earnings alerts. Probably 2 earnings alerts today that I'll be sending out. So look for those. Anyway, let's see which shorting opportunity we're going to use levels to win profit. Now, I'm going to tie some technicals in this also as we did yesterday. Yesterday we tied some technicals, which was good, but let's get rid of Garmin. What did I do? I think I brought over the wrong one. Give me a second here. Yep, NWSA. All right, so we're going to skip Garmin. Okay, so let's eliminate anything that doesn't make a profit on both levels to win sides. And I'm going to go through this fairly quick. So it doesn't look like we're going to get a whole lot of opportunities. It might be only one. Yep. WIN is the only opportunity that we can look at, and WIN actually, it's, you know what, I'm going to go into it. It had earnings yesterday, had a very negative response. That's okay. It might get a little bit of a snapback rally, but shorting at this 87.22 is a good play. So WIN is going to be my shorting opportunity for today. I am going to probably look to add at those other levels to win levels. Now the XLU is the best sector to go long, so let's bring the XLU stocks over and find the best long opportunity to pair that with, okay? Let's do that. Let's bring those over. While I'm doing this, for the week, we are long CMI. CMI is the stock that we are long for the week. It is, about break even right now, not doing horrible. Obviously, still got 3 days of trading left, so no big deal. Let's eliminate anything that doesn't make money. All right, on our long opportunities. Wow. Shocking, because the XLU typically isn't the most profitable. I'm going to eliminate the XLU itself. All right, so now we're just going to use the spread technique. Well, we're going to find the one with the largest spread. So this spread is, 21%. It's better than that, So AEP's better. AEP slightly better than Duke. ED. ED's better. ED's better than AEP. ED's got, we're about at 13% or 23% in compared to 21%. So ED is better. ETR is even better. ETR is great, and probably not going to beat ETR. Okay, so here's the deal. We're going to go long ETR at the open. And adding at that trend, so going long at the open, and then if it hits 79, 71, that's a great area to buy historically. It looks actually, I like the fact, if we look at this technically, okay, so this is what I want to show you. Look at this technically. It's sold off from this level, and then it tested again and sold off again. Well, it's eaten up a lot of the sellers up there, so now it's testing it again. So if it breaks, I think we could get a nice rally today. If we do, it's kind of testing this area again. We could get a nice breakout. So I like ETR at the open, and I actually like adding at 79, 71. And then WYN short at the open, and I actually like adding at the counter trend level 87.20 to hold all day long, close at the end of the day. That is the play for the week. We are in CMS is the trade. CMS, what I'm going to do is I actually have a stop at that 34.43. It almost hit that on Monday. It didn't quite hit our stop level, which is good. On Monday it hit 34.65, 34.58. So I almost hit that, but then it's rallied kind of since then. We got in at 35.15, so we are down slightly, nothing huge, down slightly, about the same as the market. But I'm going to actually use a target of 35.89. If we hit 35.89, I'm going to get out because it loses money there. So I've got to stop at 34.43 and a target of 35.89, and we're long from 35.15. So that is the trade on a monthly basis. We're still long the XLV, still long in CAH, and it's starting to look decent. So that's good. Please pay attention to the earnings plays. Please watch the videos in the resource tab. Do not let your trial expire. Become a subscriber. I'm telling you, listen, and take a longer view. Do not just look at one day as, oh, geez, it's horrible. By the way, this one day isn't even as bad as you may think. It's three winners and or three losers and two winners. Oh, geez, you're down, a lot. Well, with GoPro, it makes up for a lot of those losses. And then if you would follow, now that you know, if you wouldn't have taken Twitter, which you shouldn't have, you're only down, slightly for yesterday. So not even that much. So anyway, please, again, email me if you have any questions. Take a longer view. I'm here to help, and I really, everybody, I really do care about helping traders succeed in this market. I do really care about helping traders understand how to utilize our information. So email me, ask questions, and we're working on some exciting things as far as the options course goes. It's going to be amazing. Should be putting the final touches on that by next week and get that out to all the subscribers. It's going to be a huge value. Also working on some potentially some cool things for some live classes based around earnings season and different things like that. So you want to subscribe. Let me know if you have any questions. Let's make it a great day.